Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the very program. Now, how you join in and send me your questions is via WhatsApp. The number is flashing on your screens. You can send me your queries along with your name, your location, your contact details. We can give you an opportunity to speak live to our top guests and take a custom-made advice here. You can also log on to YouTube, go on to Business Today, then go to the Daily Calls Live and use the comment section there to send me your queries. I'll be happy to address that also with our top guests who will be joining in on our program as well. In fact, we have Mr. G. Chokalingam joining in, the founder and MD of Economics Research, on the very program to guide us as far as markets and the outlook is concerned and to solve all your questions and queries about the stocks as well. Let's quickly go across to Mr. Chokalingam. Warm welcome to you, sir. Good afternoon. Good to have you. Help me understand first up your quick take on the market, sir. 26,150. So we are slowly and gradually inching up higher in trade. We've already made 3 to 4 attempts before this to cross over that 26,000 mark in the last couple of weeks, but every time we've seen selling pressure at higher levels. What is the suggestion that you would have for all our viewers to look at the current price? Do you see this time around we'll be successful in retesting our erstwhile highs again? What are the triggers that markets are closely watching right now?
Yeah, good afternoon. Basically, there is only one concern, which is the liquidity. So I have been saying for last couple of months that IPO boom has chucked out a lot of liquidity. Earlier, promoters have sold for more than 1 lakh crore worth of shares. In fact, according to estimate, they reduced the stake in the owned companies by 1% on an average across all promoters selling put together. And then, a lot of IPOs which recently listed, they are going to see expiry of lock-in period in the next 2 months. Then we also saw FI selling for last 2 years. So the cumulative impact of all these 4 factors is what reflected in the market in terms of small and mid cap struggling. In fact, if you look at the small and mid cap space, 3 out of 5, if not more, stocks are bleeding from their 52-week high. They have come down a lot, anywhere from 15 to even 40%. And however, Sensex and Nifty remain robust. And this kind of differentiation between these two segments are likely to stay here, at least for next 2-3 months. We will see Sensex and Nifty remaining very strong. The reasons are DIs are buying and providing support to large caps, and also the macro factors are quite strong. Whether you talk about growth or GST collection, monsoon, agri output, except exports to US. Overall exports, many things are looking very rosy. So therefore, FI money may not come, but very heavy selling is unlikely. So in this background, they continuous buying would provide support to Sensex and Nifty. But unless the solid boom in the primary market fizzles out, the small and mid cap is going to struggle because most of the issues are in small and mid cap IPO issues. And therefore, the outlook for market would be mixed in this way. And therefore, my view is that the retail investors should focus at least 50-60% of their money towards Sensex and Nifty stocks, 40 to 50% high quality small and mid cap, but don't expect any great return in 2-3 months or even 6 months. But definitely in 2 to 3 years, they will give a phenomenal return because a lot of stocks are down even 40-50%, even some of the quality stocks. So that should be the focus. So plan your, keep your mindset ready to wait for minimum 1 to 2 years to make money in the small and mid cap. That's what my view on the overall market.
Fantastic. Mr. Chokalingam, a lot of our viewers are joining in with their questions. So let's welcome everybody and we'll start off by taking their questions. We have Aarti, we have Anuj, Satya, Vinita, all of them joining in early. Ankur also. Welcome to all of you who are joining in on our YouTube. We also have a lot of our viewers joining in on our WhatsApp as well. Mr. Chaudhary is here and we have many others joining in. So welcome to everybody. Aarti's first question we will take. She says, hello Mr. Chokalingam. I want to know about BHEL. I have 790 shares of BHEL in my portfolio priced at 291 rupees. I want to know, can I hold this stock till the budget? And what can be the expected target that I can look at on BHEL now. So, the position is till February, till the budgets that she wants to hold on to. Any uptick that is expected ahead of the budget on BHEL?
Uh, it is really stretched in valuation. Stock also recovered. I would, if you look at the P multiple, it is exorbitant. The receivable and inventory continue to remain very high. Fortunately, the stock has, recovered back close to 52-week high. I will use this opportunity to, sell this kind of stock and move towards public sector banks like, uh, Bank of India or even Maharashtra Bank, because that sector and also these individual stocks look rosy more than the positive outlook, if at all, BHL has.
Okay, let's take the next question. This one is from Anuj Singh. He says, good afternoon, ma'am. I want to know about NetWeb Technologies. I have this stock in my portfolio at 1722. I have 100 shares. I need a 1-year target on NetWeb Technologies. This has been an outperformer, and the closest listed stock that is being seen as, proxy for AI play in India. And therefore we have actually seen the stock really rally pretty smartly. Even today, the stock is at 4.6% higher, 3,440. Remember, the purchase price of our viewer is 1,722. So our viewer is sitting on good amount of profits on this stock even now. Remember this entire tech-led rally that is also being seen as among global tech stocks as well. This is right after Nvidia has posted strong numbers, and we have seen a global tech rally after that. NetWeb Technologies particularly, Mr. Choklingam, how are you looking at the stock?
It's a great business model, no doubt about it, because in a stock market you have to, make the distinction between a great company and a great valuation. Sometimes people give exorbitant valuation just because a company is really great. So, it is trailing P is still more than 100, and the kind of profit growth it is showing now is not justifying that kind of P ratio. So at best, I would give a whole call, for 1 year investment horizon. But I don't think, it can make a phenomenal return in 1 year. Maybe 1 to 3 years it can, but that also comes with the risk because the valuation is quite stretched.
Okay. Let's look at the next question. This one is from Satya. He says, hi Sakshi, I want to know about Ellen Barry Industrial Gases. I have this stock since IPO, and now it's come back to its IPO price. So what should I do? Should I continue to add more now, or should I switch my position to any other stock? I have a 1 to 1.5 years of a time frame. I think a month back, 1.5 months back is when Ellen Barry IPO had come in, from the industrial gases space. The stock is at 414 right now. What would you suggest here, Mr. Chokalingam, since it's come back to the price at which it probably started trading at? How would you look at Ellen Barry?
No, it's a small company, extraordinary valuation. These kind of companies, they get benefit out of perception and make money. So that is a risk if I base my recommendation on the valuation multiple. But I would say that if investors are highly risk taking, then it is a hold. Otherwise, it's a clear sell at current price purely based on the valuation multiple.
Okay, let me also look at the other questions that are coming in. Okay, we have Vinita Gupta. She says, hi Sakshi, I want to know about why Affle India is falling after good results. I have currently added the stock in my portfolio at 1950. Previously, I had booked out my profit also at 1820. And I want to know what is the strategy that I should adopt for the long term onto this stock. So she has already once exited with profits at around 1800 levels, Mr. Chokalingam, and she wants to know why the stock is now coming down despite decent earnings that have come in. Any suggestion on Affle India?
No, that is mainly because the growth sequentially is slightly modest. So that is why the market did not like, because the stock is trading at a P of over 57 trailing PE. So to justify that, the company should have even not only year on year, even sequentially decent growth. So it failed to have. But considering the substantial correction in the stock price and also the track record shareholder profile, one can hold it for a minimum 1 year investment horizon.
Okay, let's take the next question then. This one is from one of our viewers, Ankur Modi. He says, can you please give me an understanding of some of the IPOs that have come recently, Bellrise and Afcon Infra? How would you really look at these stocks if I have a 1 to 2 year time horizon? Now, Bellrise we know has substantially outperformed after getting listed. It is from the auto ancillary space, currently holding at around 163 odd levels. Any suggestion on Bellrise, sir? First.
Both of them, they have played out very well.
Acha, okay.
So I would sell them on any further rise because, there is no depth of IPOs. So what could happen is, because of the limited liquidity in the hands of the retail investors, so people tend to book, the old IPOs which is listed and making good profit and then apply for new IPO. So that tactical risk is also there. Apart from that, valuation wise also, as I mentioned, they are trading at over 30 PE. So I would sell them on any further rise in both stocks.
Okay. Taking the next question, this one is from one of our other viewers who's joining on our YouTube. Okay, Kamlesh Narkhede says, hi Sakshi and hello Mr. Chokalingam. I want to know about two stocks. One is from the EMS space, Keynes Technologies. That's the first stock. And the second one is Hyundai Motor. And the view is long term. This question is regarding any fresh entry that you would be able to advise on either of these stocks. Keynes Tech, right now trading at 5,985, and Hyundai Motor, again one of the recently listed auto majors.
Definitely, Keynes, the track record is fantastic. And the only concern is the valuation multiple. But even there, one may compromise considering the year-on-year profit growth. The only concern I have is that recent announcement by L&T to get into EMS space. So I think this is going to be disruptive for entire industry because I have not come across any company having the kind of reputation L&T has in terms of execution and delivery in any product related to engineering or electronics. So therefore, I would be extremely cautious in EMS space and extraordinarily overvalued stocks. In case they rise further, I would sell because once L&T comes into play, like what has happened, what is likely to happen now in solar, huge competition. Similar thing would happen in EMS space also. So this is a time to be extremely cautious. So this particular company, based on the valuation, I would hold it. But if it gives any further rally, I would use it to exit the stock.
Okay. Taking the next one then, this is from Muthailu James. He says, good afternoon, ma'am. I want to know about a fresh entry in Cochin Shipyard, one of the famous ones in the shipbuilder space. The question is, at what price should I look at a fresh entry for the long term? Now, we do know that these shipbuilder kind of stocks have actually been always in the limelight whenever there is a defense rally that comes up. 2024 was a brilliant year. We actually saw even Cochin Shipyard go up multifold for investors who had it at a very low price. We also had a bonus split for the company. A long haul of consolidation, yet again it's picking up some pace because the defense theme is yet again coming onto the focus. News headlines also giving out a lot of order flow, news flows, and therefore this space is in focus right now. 3% higher even today at 1753. Any suggestion for Cochin Shipyard, Mr. Chokalingam?
Yeah, after initiating this stock several years ago at 1/10 of current price, my heart doesn't, give confidence to give a buy call. Forget my psychological issue. On standalone, the performance, if you look at, valuation is extremely stretched. And FY25 over FY24, the growth also is missing, in profits. Even September quarter, it's not a great year-on-year growth in profit. So therefore, I would not give a buy call. Rather, I would use this current level to sell the stock.
Okay, fair point. We have Gul from Kerala writing in, says, hi Mr. Chokalingam, I have Nalco shares in my portfolio at 223 This is from the aluminum space. And the other one I have is Shalby at 220. I want to know whether it is advised that I should add more of these stocks in my portfolio even at the current levels. At what price should I look at it, and what strategy should I adopt on both these stocks, Nalco and Shalby?
Nalco is a hold, still trading at a single digit PE. Of course, metals stocks do trade at a single digit PE, but it is at around seven and a half times. So therefore, there is a potential to in terms of earning growth as well as PE getting upgraded to 8-9. So it has potential. Shall be, before I give my view, I would like to recommend that I would like to reveal the fact that we have initiated buy recommendation. Post that, we have personally purchased the stock. So the investor should consult their own investment advisor because of this fact. I am extremely bullish on Shelby, but it is only for medium to long term. In the short term, there are certain concerns, the standalone, it is making a very good profit in the hospital business. But when you consolidate the numbers, there is little stress because some of the new hospitals and also the implant business for knee surgery is not making significant profit. So at consolidated level, there is a stress. But if you look at enterprise value per bed, it looks extremely attractive. There are a lot of beds which can be slowly turned into operational. They also have a hospital in Delhi where occupancy level is very low. So there is a potential. So therefore, I consider Shall Be Limited as a great wealth creating stock for a period of 1 to 3 years. But it comes with its own risk because of the facts I have highlighted.
Okay, got that. Taking the next question, this one is from one of our viewers, Sakshi Pal. She says, hi sir, I want to know about a fresh entry in Reliance Industries and also in Biocon. Although I have a short term view here. Reliance Industries, Biocon, both from the large cap space, especially Reliance Industries, the most valued company that we have, 1545 is the current level. Brokerage houses now are penciling in higher targets for RIL. What's your suggestion, sir? Even though it is for the short term, what would you advise?
First, coming to Biocon, I am not confident at all at this price because if you look at the leveraging debt at a consolidated level, it is very huge. The balance sheet has exploded. Of course, that is because of the takeover of a biosimilar business. But that is where I have certain concerns. Last 3-4 years, the realization in the biosimilar has been going down drastically. And so therefore, and also a lot more companies are getting into the biosimilar, Indian companies, even at the global level. So I believe there will be a lot more pressure on biosimilar business. And stock also already trades around 4.5 times enterprise value to annual sales, which is quite reasonably valued. So in case biosimilar realization keeps going down, then this company will find it difficult to reward the shareholders from current level. That's my strong view. So I would rather sell rather than buying Biocon at this price. Reliance Industry, I am extremely bullish. It is already emerging as a mini economy. Range of consumer product, FMCG, they have been making tremendous progress, and they also announced electronics durables where they, as per the media sources, intend to cut the price and capture the market share. Already nearly 15,000 crore of business in FMCG they built. So I believe that in 1 to 3 years, Reliance Industry will emerge as a really mini economy or mid-size economy in itself, and cutting across various business verticals which are all focused on consumer goods, consumer related. So therefore, I believe A, the revenue profit will grow, B, it has potential to get re-rated, the stock price, stock multiples, valuation multiple, because the oil and gas profit contribution, which is already less than 40%, around 40%, it will come down drastically. So 3/4 of the profits will come from the consumer related business. Therefore, Reliance Industry will see opportunity for valuation re-rating as well. So therefore, I consider Reliance Industry as one of the most attractive stocks in the Sensex and Nifty baskets.
Okay. Let's take the next question. This one is from one of our viewers. Okay, this is Mr. Deshpande. He says, I hold Zydus Wellness. I want to know, should I continue holding or should I exit? I am sitting currently on 100% profit. Mr. Deshpande, first up, congratulations. 100% profit definitely is a space to definitely celebrate. Zydus Wellness 455 is the current level, and you already are enjoying that profit. Let's find out whether there is any scope for further profits to surge from here for you, or is it the best time to take an exit? Mr. Chokalingam, what would you advise?
Yeah, this also stretched, but still one can hold because the growth in the revenue is quite stable and consistent. So
Okay.
it is quite possible to get 500 rupee target. So I would give a hold with a target price of 500.
Okay. Hope this has helped you out. Okay, next one is from Mrs. Saktani. लिखते हैं नमस्ते sir. At which price should I make an entry in Edelweiss or even in Sterlite Technologies? Two different stocks from two different industries completely. Edelweiss as well as Sterlite Technologies. How do you see this for a long-term view, sir?
So Stellar Technology, I'm not comfortable at all for two reasons. Its performance, financial performance fluctuates widely. Stock price also fluctuates widely. So I'm not comfortable. Edelweiss comes from a great management, unproven track record in the last 2.5 decades, no doubt about it. But now, I would best I would give a whole recommendation because in the entire capital market, though IPO is booming, the markets for retail investors not doing that well, and also the competition is increasing in wealth platform. So I would give at best a whole recommendation on Edelweiss.
Fair point. Let's take the next question then. This one is from Raghu from Chennai. He says, I'm a very big fan of Mr. Chokalingam. I have a question for him. I have 80 shares of Nesco. I bought it at 930. It is now trading at a 52-week high. I want to know, should I continue to accumulate at this level as well, or एक और क्वेश्चन है इनका, लिखते हैं नेक्स्ट क्वेश्चन इज दैट 6 years बैक चोकर सर हैड सजेस्टेड BSE at 600 rupees. It is one of the biggest multi baggers. I want to know what will be the next BSE. That's an interesting question from one of your key fans, Mr. Chokalingam. So
Thank
first
you.
up, on Nesco, he wants to know what should his strategy be. He bought it at 930 and he wants to know what will be the next multi bagger from you.
In fact, I am very happy if I can take a minute. A lot of my viewers, made more money than what I made in BSE. So still I am happy. A lot of people, some people even built a research making money from BSE, they told me. So I'm extremely happy. And your channel like yours has been doing a great job in disseminating such information. Now coming back to specific query of Nesco, I want to disclose that after normally I initiate the report and then only I buy the stock personally. Also, I don't buy before recommending. Even within the guideline, I don't buy before recommending. So this stock also I bought. Why I am stressing it that it is a heavily concentrated stock in my own portfolio, family, and also in economics. So that's why I want to stress this because that reflects my confidence. I may be wrong, but I believe this possibly could be next to BSE. Because even yesterday, Nesco has uploaded investor presentation. If you look at that, in IT Park, currently they are utilizing only around 14-15% of the FSI, potential FSI they have. And they are tripling the capacity in reality. After tripling the capacity also, according to the management, another roughly 50% of the potential capacity will be still available for further expansion. So next 4 to 5 years, I believe in my working, this EPS should minimum triple or even more than triple if I incorporate inflation impact, because this business model is linked to inflation because it is purely into rental business. So as inflation moves, rental income also grows. So, in India, a lot of data centers are coming in cities like Bombay, and this particular property has got a locational advantage also, being closer to railway station, metro, corridor roads, highways, all that. And as I said, huge unused surplus capacity is available, and management also excellent. In the last 10 years, capex has grown, revenue grown, profit grown, still the cash also grown. So therefore, I believe this may be next BSE, but I request my investors, please consult your own investment advisors. I may be biased because I have heavily invested in the stock in line with the compliance guidelines only.
Okay, got that. I hope this has helped you out. Let's take the next question now. This one is from Satya. He says, can you please ask Choklingam sir his best pick in pharma sector for building wealth? What would that be, Mr. Chokalingam?
Earlier, I recommended, JB Chemical. It was like another BSc. But of course, I am not recommending JB Chemical now. Right now, if you ask me, I have an enormous confidence in FDC Limited. But I want to tell that this cannot replicate what JB Chemical has done to the investors. That story was more appealing and, size and profit and margin and all fantastic. So it is not comparable to JB, but I believe FTC Limited can create a substantial wealth. Again, we have invested in the stock after recommendation. This stock, FDC, first of all, management is excellent. They rewarded investors with several buyback before the tax policy towards buyback was changed. Several buyback they have done. It's a strong net cash company. Yeah. And 90% of the business is from the domestic Indian formulation market. That is where I gain a lot of confidence because Mr. Trump's policy on India cannot affect much at all because 90% is within India. And it also got two R&D centers within Mumbai city, and that has got a lot of implicit land bank value. I am not saying that they will dismantle research center and unlock the value from land, but potential implicit value is huge in my understanding. So considering all that and also considering the stock price correction, I am extremely confident about FDC Limited in the Indian pharmaceutical sector.
Okay. I hope this has also truly helped you out. Let's take another question. This is from one of our viewers, Sunil from Bangalore. He says, Mr. Chokalingam, what's your view on Sagility? Is it a good stock to look at for the long term? Sagility.
I haven't studied it, so I'm not able to react.
No worries, we will just toss this to our next guest. We'll take another question, and this one is from Momita from Kolkata. She says, hi Sakshi, I want to invest 2 lakh rupees in some stocks for next 1 year, which can outperform the Nifty and the Sensex in terms of returns. Please give your suggestion where exactly should I be putting in this money. Okay, Mr. Chokalingam, 2 lakh rupees for the next 1 year. Spread out in some stocks. Any stock ideas that you could give?
Yeah, first of all, equity asset allocation strategy, as I explained already, it should be minimum 50% in the large cap. So in large cap, couple of stocks give me tremendous confidence. One is the Reliance Industry, and second L&T, and third I would say Bajaj Auto. These are the 3 stocks. One can even add stocks like M&M, and then in the small and mid cap, I believe CDSL, it's going to be a great stock. In fact, the regulatory chairman himself said some days ago that investor base is likely to double in the next 4-5 years, and that would be big positive for CDSL. And then one can look at Bank of India and Nesco, Bombay Burma. So I believe this basket is well positioned in terms of their valuation to do better and the benchmark basis.
Okay, fantastic. I hope viewers, this has truly helped you out in terms of understanding what exactly should you be looking at in case you have a long-term view of over 1 year and you're looking to spread across various sectoral stocks. Then you could definitely look at this diversified set of stocks where you could be investing over a 1 year time horizon. Thank you so much, Mr. Chokalingam, for being with us on the program, and of course for guiding all our viewers out with their queries and helping us with your insights on your top choice on sectors as well as stocks that you pointed out as well. A pleasure to have you with us.
Thank you. Thank you.
All right, viewers, let's look at the markets before getting into the second segment. We'll also be waiting by to welcome another guest very shortly. 26,160 is the current level at which the Nifty is trading at, 108 points higher in trade for the Nifty. We're at the day's high point, a 0.4% of a move. Strong surge that we can continue to see on Nifty at this point. And you can actually see a lot of sectors and stocks that are supporting the sentiments. Oil and gas has pulled up. to the top spot as far as the sectoral movers are concerned, 0.7% higher. Infra, auto stocks, financial services, they're all up and about. Top movers on the Nifty, Eicher Motors, Bajaj, Finserv, you have Reliance Industries, Tech Mahindra, Geo Finance. These are the pockets that are supporting the sentiment. Let me quickly welcome another guest on our board. We have Ruchit Jain now joining in on the program with us. He's the Vice President and Head of Equity Technical Research at Motilal Oswal Financial Services. Ruchit, warm welcome. Good to have you with us as always. And you're joining at a time when the Nifty is again moving forward. There are signs that the bulls are yet again trying to make an attempt to probably go towards that erstwhile record high, 100 points higher. We are at the day's high point at 26,161. What's the technical chart telling us?
Yeah, hi, very good afternoon, Sakshi. Yes, actually, so overall trend, no doubt, when the index is moving higher, so the broader trend for the market still remains positive. If you look at the recent past, also we witnessed some correction in the market at the start of November. But the index formed a support base around the 50-day EMA, which was 25,300, and from there, it has resumed that higher top, higher bottom structure. Now, the immediate support base has shifted higher to 25,800, and till the support is intact, we believe that this uptrend is likely to continue. Now, Sakshi, if you look at this entire up move of late, which has come, it has mainly been led by the large caps and the large mid cap names. Large cap stocks such as Reliance Industries, some IT stocks came in positive move in last couple of trading sessions. Then even if you look at from the auto names, the two-wheeler names such as Hero, Motoko, Eicher. So there is a lot of buying interest in large caps and large mid cap names. So we believe that the index would continue to see some positive move supported by these themes. But on the other hand, the underperformance is clearly been seen from the small cap space. The Nifty small cap index is still into that consolidation phase where it is not seen any participation along with the broader markets. So I think if one is looking at the index, then definitely one should ride this uptrend, and we expect markets to hit even all-time highs very soon. But even if you are a stock-specific trader, then we are advising our clients to go with more on the large cap names and large mid-cap names and avoid small caps from a momentum perspective for now.
Okay, fair point. I hope this has also truly helped you out in understanding how the markets are poised to move forward from here. Let's quickly look at taking some questions now. Ruchit, we have a list of questions that are waiting to get answers to. Let's quickly take this question from first one of our viewers on our WhatsApp. This is a question coming in from Krishna from Hyderabad. He says, please could you let me know at what price can I enter Tata Power? I also am looking at entering L&T for long term, more than 3 years. And I would want to invest 1 lakh rupees each into both these stocks. Is it advisable at this stage? Tata Power and L&T.
We'll start with Tata Power first. Tata Power, if you're looking for investing for 3 years or more, then I would advise to start with about 40-50% of whatever you want to invest at current levels. On the monthly charts, although the broader trend is positive, but it is into some consolidation phase within an uptrend, and it will resume the uptrend. The broader, I am talking about longer term charts, when the stock surpasses that 420 mark. So, I would advise to invest 50% at current levels, and whenever we see a breakout over 420, and then invest the rest of the 50% that you want to do. L&T, I think even at current levels, you can look to invest from a longer term perspective. Expect some gradual up move over there, definitely being a heavyweight. It has already recently given a breakout from about 3 to 4 years of consolidation. So we believe that downside seems to be limited on L&T. You can expect a gradual up move that could continue over next couple of years. So L&T can be bought at current levels. Tata Power can be bought in part 50% at current levels and 50% on breakout above 420.
Okay, fair point. Taking the next question, we have Umesh from Delhi says, good afternoon. Good afternoon to you as well, Umesh. Hope you're well. The question is on Newgen. He's bought this stock at 892. He wants to know what is the right level to exit this stock. He can actually continue to hold on for the next 6 months also. But what price should he look to exit?
Broader trend is not positive for the stock. recently we did see some pullback move, towards the 1020 mark. But if you look at the data, then the stock is unable to close above that 50-day EMA resistance. I think within the IT space, we have seen a good resumption of the uptrend in Nifty IT index. But mainly, as I said, this is a market where the momentum or the outperformance would come from the large cap space rather than small cap names. So I would advise to take an exit even since at current levels, because that relative underperformance could continue. You can look to shift to some other IT name itself. Stocks such as Persistent is there, Coforge is there. So good outpo HCL Tech if you want to go with the large cap names. So that to stay with some larger names, rather than going with the small cap names.
Okay. Next, we have Kamal Rawat from Delhi asking a question to you, Ruchit, and this is on GK Energy. The question is that I have about 100 shares at the price of 153. I need a short-term view on this. What should be my strategy here?
Well, I don't have much chart success, but whatever charts data is available, the immediate short-term support is around 175, 176 kind of range. So I would advise to can keep a stop loss below 175 on your existing long positions. But at the same time, since I don't have much data and it's very difficult to give any concrete view, you can also take some fundamental analyst view on this stock.
Fair point. Taking the next question, we have this question coming in from Lalit. He says, hi Sakshi, good afternoon. Good afternoon to you as well, Lalit. Wants to know about Praj Industries and Pennar Industries. Fresh entry can even hold for 3 to 5 years going forward from here. Which one would you recommend?
Praj has been an underperformer. Momentum readings are but oversold, so some pullback move cannot be ruled out. But we are not witnessing that kind of strength coming in even on pullback moves. Either some up move supported by very good volumes, which would indicate some accumulation in the stock, needs to be seen. Till that, I would suggest to avoid the stock. Pennar Industries has seen some correction recently. But yes, we have not seen any high volume-based sell-off in the stock. So at current levels, still from 220 to 205, I think this is the range where the stock might look to find some support base or consolidate in the near term. So for short term, it might see some time-wise correction. But if you have some longer-term view, then you can buy some quantity at current levels with a room to average in case the stock comes to the lower end of the range around 205.
Okay. Let's take another question. This one is from one of our viewers from Andhra Pradesh. We don't have the name of our viewer though. This question is on Windless Biotech, which is currently trading at 819. The question is, I want to buy 10,000 shares. So should I buy right now or should I wait? Now, Windless Biotech, if you look at the last 4-5 years chart, you will see, yes, the stock has gone up from somewhere around 250 to over 800 levels. But in the last 1 month, last 6 months, 1 year, the stock has been underperforming. Let's try and find out whether this makes sense to really invest in right now, or should you wait? Windless Biotech.
The stock did see an up move till November, December last year. But if you look at this entire calendar year, the stock has seen a relative underperformance. And in fact, on the weekly or the monthly charts, the stock has even breached their important support. So there are no signs of any kind of resumption of uptrend as of now, even from mid to long term perspective. I would suggest to keep a wait and watch approach and wait for some positive signs in the stock.
Okay, we have some more people joining in on our YouTube. We have a question from one of your fans. He says, I'm a big fan of Ruchit sir and I want to know about NCC at 260, but he's not given his name. So request you to at least write your name so that, our guest will be able to connect better with you. The question is 260 पर NCC लिया हुआ है, exit करके कौन सा शेयर लूँ, लॉस कवर हो जाए जिससे?
Yeah, I think Anuj, thank you very much firstly. So जो हमने स्टार्ट ऑफ द शो में बात की कि ये ऐसे हम एक ऐसे मार्केट के फेज में कि जहाँ पे आपको स्मॉल कैप से रिटर्न्स नहीं मिलेंगे, बट रादर लार्ज कैप्स और लार्ज मिड कैप नेम्स में ही आपको जाना होगा, तो आपके जो लॉसेस कवर हो या फिर इवन आप देखें अप मूव में एटलीस्ट पार्शियल लॉसेस वहाँ पे कवर हो सकते हैं. सो स्टॉक्स में एक फ्रेश ब्रेकआउट एमएनएम फाइनेंस में आया है, although not from the same sector, but overall हमें लग रहा है कि जैसे बैंकिंग और एनबीएफसी स्पेस में एक अच्छी आउट परफॉर्मेंस हम पिछले कुछ समय में देख रहे हैं. एमएनएम फाइनेंस ने लगभग 1-1.5 साल का कंसोलिडेशन का ब्रेकआउट दिया है, वॉल्यूम्स भी अच्छे हैं. सो यहाँ पे एक अच्छे अपमूव्स आने वाले समय में रह सकते हैं. सो आप एनसीसी से एग्जिट करके एमएनएम फाइनेंस में शिफ्ट हो सकते हैं.
Okay. Let's take the next question. This one is from one of our viewers, Koti Reddy from Hyderabad. Says, could you please give me long-term views on Varun Beverages and on Vedanta? From different sectors completely. Vedanta is, of course, looking forward to a big trigger, that's the demerger. And when we're looking at Varun Beverages, this has been an erstwhile performer, a wealth creator of the past, but has been consolidating for a fairly long bit of time now. Any suggestion there?
So Varun Beverages, I think, is going through some time-wise corrective phase, and the stock has support around that 420 on the lower side. But on pullback moves, we are not witnessing the stock showing any signs of breakout. The 200 DMA is acting as a resistance whenever the stock is going near those levels. Even the recent news flows were there that the stock could enter into liquor space, but that has failed to show some positive move on the price at least. So at current levels, I would say just keep a wait and watch approach because this has a good support at 430, 420. But until we get any signs of trend reversal, better to avoid this.
Okay, got that. Let me also take another question. This is from one of our viewers. Pawan says, sir, is it good to buy Sonata Software for short term in the current levels?
So again, my advice would be yes, IT space is looking positive post the recent correction, but no, I would avoid the small cap or the such mid cap names and advise to go with the large cap names itself. Stocks such as HCL Tech, Infosys, or even Emphasis, LTI, Mindtree. So I think these are certain names where we could see some good positive moves if the IT sector does well. So Sonata Software, I would tend to avoid, and you can look for large cap names such as HCL Tech instead of Sonata.
Okay. Taking the next question then, we have this one coming in from one of our viewers again on our WhatsApp. Vivek from Kerala says, hi, good afternoon to both of you. Good afternoon to you as well, Vivek. The question is, I want to know about HAL. I bought this stock at 4,500. I would like to accumulate more of this stock for the next 1 to 2 years. Could you suggest a good level to look at, and what kind of targets I can expect over the next 1 to 2 years on HAL? Now, this has been a poster boy of the defense story, and every time we do see a wave happening, HAL is the first one to pick up pace. 47 is the current level. How would you look at this, Richard?
So going through some time-wise corrective phase now, we have seen that 4,300 to 5,000 has been the range over last few weeks. So as of now, it seems that the stock would continue its consolidation with 4,300, 4,400 being a support and 5,000 being the immediate resistance. And whenever the stock is a breakout above that 5,000, then we would see a resumption of the uptrend. In fact, if you look at the entire Nifty India Defense Index itself, the index made a high in the first week of June, after which it went through some price-based correction initially, and then now it's going to some time-based corrective phase. But yes, since your query is more from a longer-term perspective, this entire corrective phase once gets over, then we should see a resumption of the uptrend going forward. One of the stock that we like from the entire defense space is Bharat Electronics, BEL. So even HAL, we are positive. HAL is also good from a longer-term perspective, but relatively, I think BEL can show a good outperformance within the sector. So for fresh investment within the sector, if you ask me, then I would advise to go with the BEL at current levels also.
ठीक है, आगे बढ़ते हैं नेक्स्ट क्वेश्चन की तरफ. स्वाति जलंधर से हैं, लिखते हैं, आई वांट अ व्यू ऑन मॉस्टिप टेक्नोलॉजीज. आई बॉट दिस स्टॉक एट 247. कैन आई होल्ड और शुड आई लुक एट एवरेजिंग मॉस्टिप?
So Moschip is seeing some corrections over last few days, but the good thing is that in the month of September, when the prices witnessed an upmove, the upmove was supported by good volumes, and in correction, we are not witnessing very volume-based selling over there. So overall signs are not negative, but as I said again, small cap space is not performing. So that's the only problem I think which is there, and hence we are not witnessing many stocks showing participation on when the index is going up. Now 200 DMA support for Moschip comes around 207. So wait for some time, let the stock come around the 200 DMA. If it forms any kind of base or shows signs of trend reversal around 207, then you can review again. So don't buy at current levels, but around 207, take a review again.
Fair point. Let's take the next one. This one is from Shubham Modi from Rajkot. He says, which stock can I look at for a fresh buy between Unicommerce eSolutions? We also have Reliance Infra as he is looking at, and Aeroflex Industries. 3 stocks is what he has chosen. Would be interesting to know, Mr. Shubham Modi, as to in what parameters have made you look at these three stocks: Unicommerce, Reliance Infra, and Aeroflex Industries.
Unicommerce e-solutions technically is not in an uptrend. Volumes are also not very high when the stock is showing some pullback move. So I would tend to avoid. I think similar case goes with the Aeroflex as well as Reliance Infra. So none of these stocks are showing any kind of no uptrend technically, or neither there are any signs that it will come out with this consolidation phase immediately. So not looking much positive technically on any of these. I think you can take a fundamental view on this if you have a long-term perspective.
Okay. We have another question. Pawan Chandak from Indore. He wants to know about Grow. Only a 6-day, 7-day history that you have for this one, Ruchit. क्वेश्चन इन्होंने ये लिखा है कि मेरे पास ग्रो के 4200 शेयर्स अलॉटमेंट हुए थे, जिसमें से 500 हैं शेयर जो 134 पे है और 1000 शेयर्स 158 में सेल कर दिए थे. तो 2 बार इन्होंने एग्जिट भी किया है ऑन द वे अप. एक 500 शेयर्स 134 में, 1000 शेयर्स 158 पे, ऑलरेडी 155 पे आ चुका है. आप ये बोल रहे हैं कि अभी भी 2700 के शेयर्स हैं अभी इनके पास. पूछना चाहते हैं अब क्या करना चाहिए इनको करंटली. बिल्कुल आपने सही सवाल पूछा है. देखा जाए तो 5 दिनों में हमने इस स्टॉक को ऑलमोस्ट डबल होते हुए देखा इन्वेस्टर्स के लिए जिनके पास आईपीओ के लेवल पर ये शेयर आया, और उसके बाद कल एक लोअर सर्किट लगा और आज भी आप देख रहे हैं 8.5% ये नीचे अब 155 पे आ गया है. रुचित, आई नो द चार्ट्स आर वेरी लेस फॉर यू टू रियली इंडिकेट, बट एनी सजेशन ऑन ग्रो?
Well, since there's no data there, I cannot do any technical analysis on this. But I think such volatility in stocks when comes is better to keep tight monetary stop losses. So keep some amount fixed that you would not make a loss, or you would not let a certain amount of profit go when the stock corrects. So keep some monetary stop loss. Baki rest just listed company showing some kind of high volatility. So it's difficult to. I don't think that anyone would be able to take a guess that what it could do in next few trading sessions. But yes, if in the entire capital market theme, we like CDSL at current levels. The stock has gradually been forming a base around its 200 DMA in the recent correction. 1500, 1550, we think that a good support base has been formed. So downside seems to be very limited over there. So either if you want to make a switch or take a fresh exposure, then CDSL looks better.
Fair point. Let's take another question that's coming in from our viewers then. We have this question coming in from one of our viewers again on our WhatsApp. This is Tapan from Kolkata. He says, I have 50 shares of Allied Digital Services at 199 with a 1-year outlook. What should I do?
So Allied Digital, I think as of now, it's into some corrective phase. We can see there is we have not seen any kind of participation when the markets are going higher. So I think 145 to 200 on the higher side. This is the range where we could see a continuation of the consolidation. So overall trend does not seem positive, but in between, if you get any kind of pullback moves, then you can look to exit from this and make a switch to some other stocks. So any up move towards 190, if you get going ahead, then take a review again whether to exit there or not.
Okay. Last question on the show that we will take is of Mr. G.S. Chaudhary from Bangalore. He says, hi Sakshi, this show, Daily Calls, is an excellent support for us. And from the analysts, the guidance that we get through your program is definitely of great help. Indeed, the investors are able to safeguard their hard-earned money through this program. Thank you so much, Mr. Chaudhary, for writing in such wonderful words. That's the ambition, to help you get as much help that we can get you through our top market experts who join in on the show to give you the right kind of guidance on your stock, so that you don't have to just go on WhatsApp, rely on any social media tips that are going around, but look at authentic, credible sources from top market researchers of the country, and then take informed decisions about the stocks in your portfolio. The question he has is on some of the stocks. I'll name 2. Zydus Life Sciences, he has 100 shares. He entered 3 years back at 465, trading with a 50% profit. What should he do here? The other one is SMS Pharma. He has 380 shares, invested 1.5 years back at 265, trading with 11% profit. What should he do? Both are in profit, Zydus Life and SMS Pharma.
Zydus Life, I would recommend to hold on because the stock has seen some correction from the highs, but since it's buying price at lower levels, I think the margin of safety is good over there. So nothing much negative on Zydus Life from a longer term perspective. In fact, these are not the levels where you should look to exit. So hold on. I think whenever the pharma space resumes its uptrend, then we could see a decent up move in Zydus Life Science over next few months. SMS Pharma, a bit difficult to track this stock because of late the volumes are not that high in the stock. The 270 is a support, immediate support for the stock. So I would suggest to keep stop loss of 270. Till that is intact, you can hold on. But if that gets broken, then you can look to make a shift from SMS Pharma to maybe some large cap stocks such as Lupin, where the stock has also gone through some good consolidation phase. And in case of any up move, the risk reward ratio is still favorable over there.
Okay, fair point. All right, Ruchit, we will now just thank you on the show for being with us on the very program and helping all our viewers out with all their queries. Always a pleasure to host you, so thank you. And the viewers, you can look at the Nifty, 26,175, 122 points higher in trade at the high point, now nearing 0.5% gains on the Nifty. And you can see substantial volume moves that we are seeing on the market. So definitely building up right from the word go, and we are at the high point or before 1 p.m. We still have about 2.5 hours to go. Let's see whether we can cross over 26,200 and this time around attempt to retest our all-time high. Stay tuned with us. I'll be back for the closing edition on Market Today.